Trishul, put up your dukes. We're settling this real estate thing once and for all.
Welcome to the Mind Money Spectrum podcast, where your hosts, Aaron Ogti and Trishul Patel, go beyond traditional finance questions to help you explore how to use your money to achieve the freedom you want in life.
Hi, my name is Aaron Ogti. I'm a financial advisor in the Bay Area. I'm here with Trishul Patel, a wealth manager on the East Coast.
Great to be here today, Aaron, and thanks everybody for listening and watching.
Great to be here as well. So for those who have listened to us in the past, one of the things that has come up a decent amount is real estate as an asset class. And Trish and I have disagreed with this on this quite a bit. And we have also been talking about AI and trying to guess just like futures of careers and economy. And we get a little bit of politics and how if AI is taking everyone's jobs, then we probably need some kind of universal basic income to support many people. And I have an idea that I want to kind of flesh out that I felt pretty strongly about. I think will counter so much of what Trishul has said in the past, especially as it relates to real estate specifically.
Uh-oh. I haven't updated my priors at all. So
okay.
now we're a bit scared.
Okay. So for those who know, Trishul and I have owned rental real estate. I still own a rental property in San Diego. Trishul, you have told me offline a little bit about your experience as a landlord and rental property owner. Would you like to give us a quick update?
Yeah. So maybe what kind of sparked this revisit of real estate is a couple months ago, I finally exited the real estate landlord game by selling my rental property in Jersey. So okay. I think that might be the basis for some of the insight I might put forward at the beginning of this conversation.
Okay. Would you like to provide a quick recap of your philosophy or theory as it comes to real estate as an asset class that we have discussed in the past?
That we've discussed in the past. Okay.
Just how do you feel about real estate?
Right. So my thinking has evolved just a little bit. So I don't want to jump too far ahead, but hopefully this will be pretty close to what I've said in the past as well. So essentially, there are a handful of major asset classes that people think about. There's stocks, there's bonds, there's private equity, there's hedge funds, and there's real estate, right? These are the big ones that large pension funds, endowments, foundations may be thinking about investing in. And then certainly households have real estate as well. Typically, their primary residence is their main real estate holding. Mm-hmm. And in general, real estate has done quite well over the past couple of generations. And essentially what it's done is it's returned about market level returns, stock market mm-hmm. level returns, right? After inflation, something around like 7%-ish on a real basis. Right? And those returns are comprised of appreciation and the income that the real estate could potentially gain, mm-hmm. From rent, essentially, if you're renting it out. Now, a few things about real estate. Now, you don't want to have too much real estate. I think we both can agree upon that, right? We don't want it to be too overweight in your overall net worth. So maybe a good number, pension funds, endowments, foundations, probably target like 20%. So maybe we can think about that as a good starting point. Not too controversial there. Okay, so essentially what that means, though, is if you have a $500,000 house, that means your net worth is $2.5 million and you're rightly sized, right, as your primary residence. Or if you have like a $5 million net worth, then you got $1 million house. Maybe that's at that 20% level, something like that.
Okay.
So then the question is, what place does real estate have in the portfolio? And what's going to happen with that primary residence as that focal real estate point? Now, one thing I would say with the primary residence is you're probably not going to capture that full real estate return because you're not getting rent, right? You're living in it. So
Okay.
you're probably going to get like about half of that return, but it's a good way to create value, maybe, question mark. That's what I'm going to push back on, right? Okay, so here's my fundamental concern that I've laid out on real estate over the past handful of episodes that we brought this up. So basically, a generation ago, housing costs were about 15% of the household budget.
Okay.
And what that kind of meant is you could buy a house with like maybe a 3 to 4x times your annual salary, something like that.
Okay.
Put your down payment, and you could have a nice home, 2-car garage, whatever medium family home price, was sensible. But what's happened over the last generation is the price of real estate has increased above and beyond the price of inflation.
Mm-hmm.
What that means is real estate has provided a nice return for investors, because if something appreciates higher than the price of inflation, that's a good thing.
Mm-hmm.
However, the affordability of real estate has not been good. And essentially what that means is now the average household has to spend 30 to 40% of their household income in real estate.
Okay.
So here's a couple of things to consider based upon that. A large reason why real estate has done so well over the past generation is not because real estate has been real estating any better. It's
Mhm.
because of supply issues, in my mind.
Yeah, I agree with that.
Essentially, what the government decided to do a generation ago is make it really easier for people to buy real estate, but they didn't make it really easier to create more real estate.
Mhm.
So they artificially increased the demand of real estate through subsidizing loans, right? Making it easier, keeping the interest rates lower, making down payments lower than they probably should have been, right? In some situations.
Mhm.
And what this did is that caused a lot of people to go out and buy some real estate, but with the constrained supply of real estate, the prices just ended up going up, meaning you had returns that outpaced inflation. So now we're in a situation where there is a lot of demand for real estate, but not enough supply. The supply has been constrained for a handful of reasons, and I can talk about that now because I'm actually actively thinking about another real estate situation. I'll talk about that later in the conversation. But essentially, supply has been constrained by a lot of concerns, mainly the fact that it's just so hard to build housing, right? There's a lot of regulatory issues you have to pass through, and there's a lot of constraints, and the cost of manufacturing homes hasn't really decreased as compared to CPI. A lot of industries have become more efficient, but the cost to produce a house has not. You would think all of this great technology, you think we could build a house more cheaply, but no. You add up all the bureaucracy that it takes to build a house, it's actually costs more. Okay, so now we're a generation later, and now we got to ask ourselves, okay, does real estate make sense for the next generation, for the next 30, 40 years? Here's what would have to happen, right? We would want real estate to provide comparable returns to the stock market like it did over the last generation for it to make sense, right? Otherwise, if the stock markets did considerably better, that would be the place where you would park your money, right? If you have similar risk-reward trade-offs, which they do, if you look at if history is to be our guide. Okay, so now in order for real estate to be a good deal for the next generation, you would have to get above CPI level returns on the rate of real estate performance, meaning if CPI is X, you would need X plus 2%. That's what real estate has done, meaning CPI or inflation was around 2%. Inflation or the returns of real estate over the past generation has been around 4%, right?
Okay, I think it's a little higher, but sure, let's go on.
Yeah, 4.5, whatever it happens to be. Okay, so
I'd say maybe on the appreciation side, but I think total return was still closer to stock market.
Yeah, I'm just talking about the return of the asset. Remember, half of the return is also coming from rent, so then you double that, right?
Yeah.
Okay, so now for the next generation, in order for that same thesis to be true, that real estate is a good investment, you have to keep up this constraint in supply, right? And you need to have the price of real estate to grow above and beyond CPI at a good amount. Now, for that to be true, what that means is then instead of the average household spending 40 to 50% of their household income on real estate, they're going to have to spend 80 to 100% of their household income on real estate.
Okay.
So then you're left with a situation of, okay, only a few outcomes can be true given all this. So in a generation from now, either everybody's spending all of their money on real estate, or real estate turned out not to be a great investment.
Okay.
So that's probably the most in line with what I've said before. I do have some more updates to all of that, but I think that's probably enough for me to
Okay. That was. I don't actually disagree with anything you said, but I think you might be missing the point completely.
Okay.
So I'm gonna try not to get too far too fast. I'm gonna try to set this up.
Okay.
We've had conversations about AI.
Yeah.
Okay. And I think one last conversation you mentioned jobless growth. This idea some companies will do well without hiring more people.
Right.
Okay. And if we're trying to guess what this looks like a generation or two into the future, we think again, one of the premises, one of our guesses is we'll get to some level of universal basic income, some kind of negative income tax, something like a European socialist democracy, where if you want, the government needs to provide enough money for you to be able to pay rent somewhere. Okay, and so those are kind of a couple of premises. There's going to be a UBI because there aren't actually enough jobs for the population. Okay, so that's kind of a couple things. I also think about the idea of location, because I also don't see the supply increasing dramatically of real estate. So I do think that will still be an issue. I don't think the bureaucracy is going away.
Okay. The robots won't solve that.
I also I'm looking at this separate from your primary residence, even though and this is one of those things where for so many people, their home has become the largest portion of their net worth when we look at the population. And that's not what I'm trying to discuss. Because I'm for my clients and the work that we talk about, your home is where you live. It's not an investment. We don't plan on using home equity to support lifestyle at some point in the future. That in general, it's so the comparison isn't buying a home versus kind of stocks in that part. It's like, do you buy a home or do you continue to rent for the rest of your life? And I think that is close enough that I'm going to be agnostic of that part. So I'm not talking about your primary residence, whether you buy it because if you buy it and you hold on to it forever, theoretically, the appreciation doesn't matter to you. It's the cost of buying it, mortgage payment, because that's eventually gets paid off, versus the money was a down payment, and the difference in mortgage payment versus rent. Could you use the same capital, both the down payment that gets invested plus your income, to pay rent for the rest of your life? Do you accelerate cost of housing into a 30-year period, or do you have a lower payment for the rest of your life? So, but that's not part of this conversation. What I'm thinking about is that idea, Just out of curiosity, did you live in the house in Jersey that you sold recently?
For 2 months, I think,
Okay.
after I bought it. That's
Okay.
it. Over. To be fair, I bought it in 2007. I sold in 25, or last
Yeah.
year. So, I think the answer is basically no,
Okay.
if you
Well, no, but
round it.
okay. So did you buy it with the plan of living there?
I did, but then
Okay.
I got into business school, and I probably.
Okay. And so the house in San Diego, my wife and I, we bought that. We were planning on living there,
Mhm.
and things changed, jobs changed. We moved to the Bay Area,
Right.
but we held on to that. And I actually see that kind of accidental landlord situation play out a decent amount.
Yeah. Right.
And so what I'm looking at is either you already own the property, do you sell it and reinvest, or we have capital, do we use it to buy real estate?
Yeah.
Okay. So trying to do we make this investment in the portfolio side? And so now we are actually directly comparing to stocks. I think.
Yeah.
I think this is probably a better comparison.
One small caveat, though. So let's assume that you already have 20% of your net worth in real estate. Are you saying, let's buy more?
Short answer, yes, because I'm excluding the equity in the home at from your net worth, and I'm kind of focusing on investable net worth.
Okay, so as part of your
The
investable net worth, you're going to carve
yes,
out a slice for real estate.
correct. The
Okay,
assets designed to support your lifestyle at some point in the
sure.
future,
Okay,
which I think is part of the conversation, because if you're also collecting that UBI in the
yeah,
future, you don't need the UBI. You don't need that income to, like, you could save it and like build it up. Like, you don't need your investments to help pay your housing if you wanted to. You could choose rent or buy with your UBI income either way.
sure. Yeah,
Okay.
yeah.
The next level, and this is one of those things I haven't actually talked to you about, because I'm really curious. This is probably the weakest part of my argument.
Okay,
I wonder what stocks will look like over the next couple generations.
okay.
I actually, with things like AI, with companies staying private longer, other ways to raise capital, I wonder if if there's going to be an S&P 500, if there's going to be enough companies to invest in for everyone to invest in. And I I do think kind of equities will probably continue to outpace inflation the way they have. I think that economy part works pretty well, but investing in a market so big that any individual investor kind of can participate and just ride it, I worry about. I don't say worry. I don't say worry. Wonder is a better word. Where I can envision a future where there's a magnificent 10 and a lot of other companies that are privately held for owners, and stocks just aren't quite doing the same. And I get here again, I acknowledge this is probably the weakest part of my argument, where if this gets back to like that jobless growth idea,
Yeah,
if they're able to grow without jobs, it implies that AI and technology is taking over, then like, what stops it from like a CEO and a small handful just holding on to most of the ownership, like the founders plus a few others? I
okay,
That's one of the things I wonder.
okay.
I also think that in a post UBI world, there's still the capacity for people to generate wealth, like kind of following normal uh, Adam Smith economics of they will provide some kind of good service or value like that other people will pay for. And so I don't think that we're going to a Star Trek future of everyone's has like no money kind of thing. I still think that there's going to be the ability for people to have wealth greater than what the UBI provides.
Okay.
Okay.
Yeah.
Given these things that I wonder,
Okay.
along with the other one was the ability for work to be location independent.
Okay.
Okay. Where you no longer need to live in one of the big cities if you don't want to. You can
Yeah.
choose where you want to live.
Yeah.
Okay. Given that there's going to be people who are generating wealth and they can kind of live wherever they want,
Yeah.
where would they want to live?
Okay.
Okay. You used to live in Pennsylvania, correct?
Yeah.
And now you live in Florida.
That's right.
Why'd you move to Florida?
I think I've mentioned this before. We moved up to Pennsylvania. Well, basically, we were traveling around a lot, and we set up camp in Pennsylvania around 2019, and then COVID hit 2020.
Mhm.
And basically, my daughter's daycare closed up there, and it wasn't great being up there when it was very cold. There wasn't much to do, so that's why we moved back to Florida.
And so my theory,
Yeah,
when it comes back to that location,
yeah,
is the places that are desirable to live
yeah.
with, especially climate related,
Hmm.
will continue to do strong because I think there will continue to be demand for those areas and not enough increase in supply.
Okay.
That real estate across the entire country as a national average, I have no idea. I
Yeah.
don't like I can see, sure, you might be right about that.
Okay.
But I do think that choosing to own real estate in, again, areas that are desirable to live independent of jobs,
Yeah.
I think will continue to keep up with stocks that also, like, I think they'll do fine because it's again the most likely thing, but it's one of those like little bit of a diversification aspect of what if stocks like just go away kind of thing.
Okay.
Like is it because like do you understand that the idea, like, is that possible? Do, that all the companies become kind of privately held and we go back to robber baron train owners and oil companies and we have less capacity for the entire population to grow their net worth solely by passively participating in stock market growth versus those who are building the companies. I think entrepreneurs will continue to do well. I think that service providers and the ability to generate value will continue to do well. And I think those people will choose to live in California, Arizona, Texas. Like I don't know like enough of like the difference in like climates in the southeast kind of thing, but I think that location of real estate will continue to matter a great deal moving forward, which is
Okay.
why I do think that holding on to an individual property as part of your portfolio, again, not the majority, like a good 20-30% of the investable net worth side
Yeah.
in real estate is a solid legacy asset over not over along with stocks, along with publicly traded stocks.
Uh-huh. Or maybe not even stocks based upon your argument.
Yeah, it's like it's but it, like I don't want to like I don't like, how do you get into like passing down like privately held businesses? Like, yes, all those who own privately held businesses have estate problems. Those are huge, complex problems that lawyers and advisors make a lot of money helping with.
Yeah.
But it'd be like I'm thinking like uh is it a C corp, like you can't have more than S corp, you can't have more than 100 employees or something like that?
Yeah.
So uh it, something along those lines of like, if there's a possibility of not all of the companies being publicly traded, like I, again, from my personal experience, my wife worked at Shutterfly. They were taken private by private equity firm. It gutted them. The company still exists and makes money,
Yeah.
but the employee count has shrunk dramatically, and doesn't look like that company's going to start increasing the number of people there. And they may go public, may not. The owners have a business that makes money, and they'll continue to manage that. And so I wonder if things like that might happen to other mid-size companies.
Uh-huh.
And so holding real estate in desirable locations, I think, is a good diversified asset, especially in a post UBI and AI world where work becomes location independent.
Mm-hmm. All right, so that was a lot.
Yes, yes. I got like 5 or 6 premises, and not all of them are that strong. So
okay,
okay,
let's do it. Ready?
yeah. Okay, you got notes?
I took a few notes.
Okay,
That was a lot though. So
what you got?
All right, I think first let's just think about what is an investment. What's an asset, right?
Mm-hmm.
And I like to think about this across a few different notions. Ideally, an investment appreciates, and so does an asset, right? And I think there's a distinction that we need to think about in terms of what makes a good investment and what is just an asset. Because in my mind, not all assets are investments or good investments. And here's why I say that. Some assets are just meant to store value, right? Like gold,
Okay.
like cash. Right?
Okay.
It's an asset, but it's not meant to do gold better or do cash better. The only reason it might go up in value is because of scarcity reasons.
Okay.
So I'd like to separate that type of asset from an asset that's designed to go up, like public stocks. And stocks are designed to go up because stocks get more efficient at what they do. Companies go out and they become more productive over time. They do what they're doing better, otherwise
Okay.
they die. That's their job. Their job is to increase efficiency, to increase
Okay.
productivity, and that's why their values go up over time. So if I were to place a bet on where to put money, I would put it in an asset that's designed to go up because of increases in productivity, not because of scarcity reasons. And
I do like that idea. And I think this is part of what, like, the rent matters. I guess I'm saying like
yes,
this.
yeah.
I think that supply and demand of like where people want to live matters.
Well, again, so what we're banking on with real estate is a supply constraint issue, right? What we're saying
Yeah.
is real estate isn't going to real estate any better. Real estate is going to be worth more because there's supply issues.
Yes.
And
I grant that. One of my premises is that people will not want to live in the snow when they can live in California.
yeah, and I'm going to push back on the actual supply issue being an issue, but I'm saying that's one reason in my mind why I prefer public equities. For example, it's another reason why I'm not a big fan of gold either or other commodities.
I agree with that. I'm in general not a fan of gold. Similar, like Bitcoin might be a different, like, loaded topic, but similar idea of like, I think it's gold in a best case scenario.
Yeah, like for example, the only reason Bitcoin is going to go up is not because it's Bitcoining any better,
Yeah.
right?
Yeah.
It's not getting better at Bitcoining.
Yeah.
It's because there's a constrained supply of BTC, right?
Yeah.
But where is that supply coming from? Is that artificial, or is that a fundamental constraint of physics?
Talking about real estate or Bitcoin?
But well, I'll get to
Okay.
real estate in a second. But
Okay.
I was about to say both, but before I say both, Bitcoin, right?
Okay. Okay.
And so my point is, we can create enough crypto out of thin air as much as we need to satisfy the needs of crypto.
I agree, and that's why I tend not to like it. But I don't think you can create more land.
Here we go. Okay, so now again, the premise I started with is we want to invest money, right? We want to put money to work to do well. And if we have a choice of what to put money into, I would prefer to put money to work in things that get more productive over time, because there's no potential cap on productivity.
Okay.
Productivity can keep going up, essentially. Now, productivity as measured by the economy, it increases GDP, right? So GDP is a function, gross domestic product, of a given nation or the entire planet is a function of essentially two things: how productive each individual person is, on a per capita basis. How much value can each individual person add on average in the median case, times the number of people, right? So you can increase GDP two ways. You can become more productivity, or you can have more people.
Yeah.
Right. So with real estate, my concern is that it's really relying on that constraint of supply. And how stable is that constraint when we know a couple of things? We know that populations may not be increasing as they did, or certainly not at the clip they did over the last generation. That's a large reason why real estate was able to perform so well as an asset class.
Okay.
In fact, there's empirical evidence in other countries where populations are stabilizing or slightly declining, where the price of real estate is kind of falling through the floor.
I think I want to understand those better.
Yeah.
Because we don't have that many examples of like just a country that's large enough to have a wide variety of climate and geography.
Well, the one example that comes to mind is Japan, right? You have like 170 million people, right? Like,
I understand, and I think that's part of like, I think other than like mountainous areas, most of it is coastline. But I don't know what the like normal average temperature, like what the climate's like. Like, are there better places in Japan to live based on climate?
well, Japan is a large concentration in the big cities, and people want to be in the big cities like New York or San Francisco, or right. So that's where the prime real estate would be. Now, here's what we've seen in my mind with real estate in the U.S. Right? So we've seen.
So okay. I don't know if you know this.
Yeah.
Is real estate in Tokyo going down?
Yes.
Compared to the rest of the country?
Well, I don't know as compared, but okay. So let me give a few let me explain the U.S. situation, and then I'll tie it to Tokyo with more specifics. We can even pull up some videos or whatever. Okay, so now in the U.S., or what's happened with real estate over the past generation, as we mentioned, is there's been a constraint on supply, but there's been a big push in demand. That's a lot of it has been kind of artificial. The mantra is everybody should own a home, but let's not build them. Let's
just
let's make it really easy to afford, but let's not increase the supply to match that affordability, right? And then prices go up, And now we're in a bit of a situation where a large percentage of American households have their net worth tied in real estate. It's a bit of a house of cards. If we did go out and build all these houses, well, there goes our whole economy, right? Because now the net worth of a large percentage of Americans is squashed. And here's what happens with an asset like real estate, where you need a home, right?
Yeah.
And if there's a slight differential in the supply versus demand, then people are going to really fight for that last home, and it's going to push up the price that much more, right? And this deals with elasticity of demand, right? When in a constrained market where it's a good you need. And like, for example, you have 100 people on an island and you only have enough water for 90.
Yeah.
Well, everybody's going to be fighting to death for that water. But if you have 101 supply of water for 100 people, the water is basically going to be free.
Yeah.
Everybody has all the water they need. And with real estate, it's kind of similar. You're seeing this large increase in price because there's a small differential in demand that hasn't been able to keep up. Differential in supply and demand. But once that flips, then things come crashing down. And that's what we've seen in Japan. So here's a few examples. You can, I should probably just bring up a video or something. Maybe we can show it, like Japan.
So I guess one of the things, I guess maybe what I'm betting on is it's nice to have a backyard.
Yeah.
And there is a finite amount of space with a nice climate and a backyard.
Yeah.
I see most of the solutions to housing demand and scarcity are building multi-unit buildings.
Yeah.
Apartment buildings, condo complexes, but you're fitting more people on the same amount of land.
Yeah.
And when we went through COVID, I remember, and it's probably the Bay Area, I don't know how applicable this was to other areas, but apartment rents went down while rents and values of single family homes went up. Again, because you couldn't have the social interactions, but like people wanted a backyard kind of thing.
Also free money.
Well, free money doesn't say why rents went down.
Oh, I meant housing prices up because people could borrow
but you
for
saw people
0%.
Rent, instead of renting an apartment, they would rent a single family home.
Right. Yeah.
Like, so even if they weren't buying, but
and stimulus checks, right?
Yeah, exactly. Yes. But maybe that is an American thing, and maybe I don't know enough about the rest of the world, but my guess is that Americans have shown they like having a backyard and they don't mind highways to drive to work. Yeah. They like living in suburbs, and that's part of my guess.
Okay, so I put in YouTube Tokyo real estate. I'm just gonna click on the first video, right? Let's just
sure this is gonna go great.
Okay, so let me share a screen or something. Maybe this guy or video person will appreciate some publicity from our dozen listeners. So let's see. Okay, so I'm gonna share. Let's see. I gotta remove this. Sorry. Okay, so what am I going to share? Screen. Here we go. For our listeners, I guess you'll hear what I'm showing on the YouTube. All right, is that ready?
Yes.
So, hopefully the sound will even come through.
Let's see.
How much does a fully
Can you hear that, Aaron?
Spacious
yes.
In the heart of Tokyo cost? This unit sits on the 9th floor of a 10-story building built in 2000. And just look at the view of the Motoazabu Hills Forest Tower. Step inside and take in the massive 103 square meter space. The open plan kitchen flows beautifully into the dining and living area. Check out this kitchen, built
You want to guess how much before he gets to the end and says? I'm guessing he's going to say.
I'm gonna guess it's on like the
It's
yen
Tokyo.
of like 100K.
100,000 US dollars.
Yeah.
Okay. In New York City, how much would this, or San Francisco, how much would this be?
103 square meters. I need to do.
It's like 1,000 square feet or something. Oh boy, GPT, where are
yeah,
you?
1,000 square feet. Okay, 1,000 square feet. Depending on where in San Francisco or New York, 1.2 to 1.5 million.
Okay, now that's how much it was in Tokyo. Before the real estate prices started dropping and the population started shrinking. Right?
Okay.
I think we know that, right? Like that's how these cities were expensive
Probably.
to live in. Okay.
Miele dishwasher, fridge. That's right.
For people listening, it's new, it's updated, everything looks nice.
The fridge looks like a pantry.
Yeah.
So
It's a perfectly updated place. It would be $1 million condo, 3 bedrooms, so maybe it's like 1,200-1,500 square feet.
Yeah. Okay.
Okay, there's about 10 more seconds. He's gonna probably say.
If it doesn't bother you, keep watching. The main bedroom is wrapped in windows and drenched in sunlight, and it's just a 2-minute walk to Asabujuban Station.
2-minute walk to a train station.
Okay.
It's listed for 429.9 million yen, or about 2.9 million dollars. Would you live here even with the view of cemetery? Stay tuned for a full episode.
Okay, so couple million, right?
Yeah.
Okay, so now, we don't have to even whatever click on all of them, but basically, here's another one.
I'm here today at Central Park Tower, Latour,
Okay.
Shinjuku.
It's okay. Go ahead.
I'll just jump straight to the end on it.
Okay.
How much does a 5-bedroom house in Tokyo cost? This one might blow you away. It's a full 5 LDK sitting on 187 square meters of land with 158 square meters of living space. Just 4 minutes to Tsunagawa Namban Station, and from there, only 42 minutes to Shinjuku. It even comes with parking for 2 cars. Step in, it's open, and it feels bright.
Okay. The
living
video
room is wide
stopped.
and
Yeah.
welcoming, with
I don't want to
direct
do
access
whatever because it's gonna restart.
Okay.
Sorry. Hopefully, we'll just jump to the point.
Not our best podcast.
Well, for the audio listeners, you got it all. For
right beside it, another Western style room with outdoor access.
it said 500,000 yen.
I think
by
so
the
too.
way.
Yeah.
So maybe we can just Google that. Okay, so what's 500,000 yen? Somebody. It's about 100 to 1.
I remember that when my dad was in the Navy, so I was in high school. The yen was like worth a penny.
Yeah, 100 to 1, approximately. Okay, so that's a couple million as well. Now, basically, anything outside.
Okay, 500,000 yen is $3,500.
Okay, so now here's your garden thing, right? Backyard.
Okay.
All right, first video.
Okay.
Now we're in the country.
This is what $32,000 can get you in Japan. This traditional Japanese house may be the one that you've been waiting for.
I think it's the same guy.
5DK house is located in Maniwa.
We're not surprised if you like.
It was built in 1980 on a whopping 658 square meters of land with 120 square meters of building space. And certainly it comes with car parking space for up to 3 cars and a rice field. Please note that if you purchase this house, it will be cleaned and you may get subsidies for renovating place. The nearest station is Komi Station, just an 8-minute walk away. It's also an hour away from Okayama City Center by car. The first floor features 3 Japanese-style rooms, a dining and kitchen area, a bathroom, toilet, and powder room. The second floor has 2 more Japanese-style rooms.
Okay. So it says $32K for this?
Yeah, $32,000. And you'll probably see the same for the next one. I won't play it, but I'll maybe hover and you can see.
Okay.
Say it, dude. Anyway, so
I think you chose all the same same YouTube
guy
YouTuber.
person.
Yeah.
Okay, so essentially, this does say part of your premise is right. In some areas, real estate in Japan has stayed high, but in others, it's completely gone through the floor.
Mm-hmm.
So basically, they're at that point where they have 101, sources of water for 100 people, right?
Okay.
And what that means is what's really supporting the price then of
Okay.
the asset. And the prices of the assets just fall because who's going to pay something where there's more supply than demand?
Okay. The other part of this is how reliable is a passive index strategy post AI and UBI in that jobless growth world?
Yeah. Well, okay, so I tried to. I actually haven't heard that argument at all. That public companies will be not a thing. So I don't even know how I might respond to that because it just never crossed my mind that
This is, in my mind, it's a playing out the both wealth inequality and concentration of, like, the S&P 500 is now made up of, like, I forget the ratio, but like a third of it, of half of it, is made up of 7 to 10 stocks.
yeah, public stocks though.
Yeah.
But can you imagine them going private? These are $1 trillion companies.
No, I'm actually worried
Okay.
about the other 490 companies.
Oh, okay, getting bought up or consolidated.
Yeah.
Okay, yeah.
And, like, can those few companies
Yeah.
support the, like, stock market investing infrastructure that we currently assume is, like, just completely liquid, easy to access, like trading is now free?
Yeah.
Like, can they get to that level? Like, can they continue to support that if there's only 10 of them?
Yeah. So let's talk about that side a little bit. So with companies in general, right? The way the structure works is it's typically not the CEOs who have the money, right?
Mhm.
To begin with.
Agree.
It's the investors, right? That's the top of the
So
top of the pyramid, maybe
okay.
bottom of the pyramid. Anyway, so it starts with the money.
Well, no. It starts with the founders who build something, and they got to raise money
Right. Yeah.
from other investors
Yeah.
to hire more people to build the company bigger.
Right. Yeah. To raise
And what
capital.
happens when those founders don't need to raise outside capital?
Right. Yeah. Good. Yeah. Let's think that through a bit. So traditionally in the past, creating business was very capital intensive for two
Yes.
big reasons, right? One is labor costs, and the other is just manufacturing costs, right? The brick and mortar buildings.
I think, well, maybe it's, I don't know well enough, but I'm thinking of the brick and mortar buildings probably on the labor side, where, like, you need an office to hold all the workers versus the machinery and or equipment related to the thing you do. Like, if you
Sure, yeah,
open a restaurant, you need, like, kitchen, you need a stove, you need an oven, kind of thing.
Yeah.
If you open up a car factory, you need the actual physical equipment. And but if you don't have a business that is capital intensive like that, the office space is just where the employees work.
Sure, yeah. So what happens to businesses that exist in the future if they don't need as much capital resources as they did in the past? Is what you're saying?
Yes.
Okay. I think it's a good question. So here's what I kind of see in a couple different trajectories. I think currently the equity markets are very robust and strong, even though
Yes.
and there's typically an ebb and flow between private equity and public equity that's cyclical in nature.
Okay.
But both markets are growing and have been growing. So I don't think we've seen this trend beyond cyclicality, shift in any major direction yet.
I'm thinking like again, 2 generations of the future.
Yeah.
Do movie studios exist?
Yeah. So
When anyone who has the idea for a movie can produce it themselves. They don't need a movie studio to hire a few thousand people to help get the movie get done.
Yeah. So here's a couple of things that would kind of would likely be true in this future scenario, right?
Mhm.
We already started off with the premise that there's a UBI of some sort,
Yep.
right? And what this kind of means is the cost of things has likely fallen. And we've already noticed this pattern. Things are
Yep.
getting so cheap, especially commoditized things, that you can get most things for very cheaply, right? In fact, the few things that have gone up in price are because of these constraints in supply. And the big three we've mentioned are housing, education, and healthcare.
Yeah.
And what I haven't argued yet, but that's on my sheet of paper, is I think those three are on the chopping block for commoditization at some point very soon, if not certainly over the next 20 years.
I'll give you 2 generations. Like I don't know if doctors will be replaced by AI in 20 years, but 2 generations maybe.
My premise is that the competitive pressure from AI will unlock a lot of the rent seeking that's happening in these industries that's causing prices to be elevated. This is a whole separate discussion for healthcare and for education, but for real estate in particular, I think let's dig into that because that's what this conversation is about. I think there are solutions that the technology can bring to the table that can help alleviate a lot of the supply pressure that we're dealing with. For example, if we're saying that a lot of businesses will no longer need people and offices, well, now we're already in that situation potentially where we have enough supply. We have all these office buildings we've already built. There's enough office buildings, if converted into homes in these metropolitan cities or whatever, to house 120% of the population. There's already enough water, right? So that in itself, right, may solve that supply demand issue with real estate.
So yeah, I part of my premise. Like, maybe I should have added this kind of I connected this final point that I didn't make it clear. The converted office buildings will be the population whose UBI pays their rent. The entrepreneurs who want to grow their net worth and income above UBI will want a backyard. And so maybe like real estate. So that's why I say like real estate as a whole, I kind of agree. But when it comes to that location idea and the actual plot of land, which I do think just U.S. laws and regulations will support that ownership and passing on to heirs. And again, if it's going to be location independent, like I think real estate will be like going to the theater. Like movies are really cheap.
Yeah.
Going to the theater is more expensive than it's ever been because it is constrained. You can only get a certain number of people in the theater to see the live show.
Okay.
And I do think there's going to be a the Rust Belt, Detroit, Chicago, maybe probably Chicago, Cleveland. I'm thinking like this AFC and NFC North teams.
I was going to say, are you throwing out to the bus like all the
I think that
non
those places will probably be a bad place to invest in real estate.
Yeah.
But like we already see retired New Yorkers move to Florida and Arizona and California, probably even more Southern California. It's like I think that those will become like niche, nice places to live for those who have the means above UBI.
Okay, so a few things. Taking your theater example as a starting baseline, what percent of the population will fall into this demographic that is able to use their plus UBI income to buy real estate?
That's fair. And I honestly have no idea. Because like one of the things we talked about is like our guess is that the majority of the population will still seek to make money above UBI.
Uh-huh.
That's our guess. Okay. And I do think that there'll still be some spectrum, but again, so like I'm not talking about the current billionaires. I do think that the actually my guess is like the rough distribution that we have now in terms of like what wealth can afford to live where.
Yeah.
I think that will continue to be the same in desirable locations.
I think we can bring a little empiricism to this. For example, here's my take on real estate. I think there's two markets for real estate, and this aligns with what you're trying to say. I think there's the market of real estate for the median household,
mm-hmm.
and then there's the market of real estate for the wealthy. Those that are whose net worths are tied more specifically to passive income sources like equity.
Mm-hmm.
And I say this because I think we've even noticed, and I don't know if we need to bring the GPT into this or not, but we've noticed that when markets become cyclical and go through downturns, the median household price does go down. However, if there are periods where the stock market still stays resilient over those cycles, then the housing affordability of the wealthy is not impacted. In fact, those houses still go up in value.
Another like very anecdotal example. Larry Ellison, founder of Oracle, owned some lakefront property in Tahoe. And so like because I go visit, I hear the stories to like local news up there, and kind of kept buying more and more lakefront properties in Tahoe. And like one of the ideas, like there's a finite amount of like lakefront property for Lake Tahoe, because the like human scale is less than the geological scale kind of thing. And so I actually think lakefront property in Lake Tahoe is not going to go down anytime soon.
Okay, so a couple of things. So I think that bifurcation is kind of true, right?
Yeah.
But I think also the distribution is similar to your theater analogy, meaning the percent of population that is theater-esque is a small minority, maybe 5-10%.
I think it's going to be a similar distribution where it's like 5-10% can own multiple homes.
Yeah, but potentially.
I think that it's going to be probably another 20-ish percent, 20-30% can't own a single family home with a backyard and enough space to make sure every kid gets their own room and or office/guest room, something like that. I think
Yeah.
that'll be like the top 30 or 40% of the population.
Well, I put it closer to 10, and here's kind of why. Like, we know that the majority of equity ownership, right, of wealth
Yeah.
is concentrated in the top 10%.
Yeah.
And that concentration is increasing, right? Instead of becoming more distributed.
Okay.
So I would put 10 as an upper bound. And
but I think those are the people buying multiple homes.
Sure. Yeah. So I think a couple things. What that does mean, though, is the median real estate purchase in the U.S. is probably going to follow a worse trajectory.
So again, I think that like that wealth inequality, if it gets too bad,
yeah,
that is a impact on this premise, I guess I say. But yeah, I think that those who are going to depend on UBI to support their lifestyle, they'll rent the vacated office buildings. But
yeah.
I think that there will still be, again, it's one like, I think that the desirable locations will still have more demand than the land can support.
Okay, but then what we're still probably agreeing on is 90% of the real estate will not be a good investment, in air quotes.
Across the entire country, yeah. Maybe.
Okay, so then we're saying, okay, there could be a niche market. Essentially, I kind of agree with you because I do have this kind of thesis, but I think it works like this in my mind. I think, like I said, that there's some investments that are better than others, or some assets that are better than others, and I would rather put money to work in investments, whether it's private or public. If public equities disappear, okay, private, right? But essentially, things that go up because their value increases due to increases in productivity. Now, I see how real estate will also go up, but I think it's more of a consequence of those investments going up first, right? And real estate is on the coattails of the investments. It's not the horse, it's the wagon. I'd rather put money to work in the horse.
I'm okay with that. I see it as also a little bit of a generational diversification. That this, I don't think ownership of land, like the land can't, I was like, a company can go bankrupt and the stock is actually like literally nothing. Like the land, you theoretically own that and you own the building on it, kind of thing. Now, like you might be able to sell it for like it might be able to provide a home for your kid, if nothing else.
Here's the tricky part with that. So you made a good point, which is that the company can go bankrupt and the land would be better in that situation, right? But what you're also highlighting is the idiosyncratic risk of investing in a particular company, and investing in a particular property.
Yes, I agree with that.
So, but with equity investments, we can diversify across 20,000 public companies. So then the comparison would be,
I think that's I worry about that. I worry about the ability to, again, on the scale of 2 generations, can we diversify across 20,000 companies?
So that might be worth that.
It's like if everything's going to be idiosyncratic risk, I want to diversify. However, I still want the diversification.
Okay, so I would say that's a very big conversation, probably for the next one, because I know we're knee deep into this.
Okay,
will public markets disappear? Right?
I feel like it's more of a I don't want to make that argument. I guess I'd say it's more of it's a realistic enough possibility that for my family's generational wealth, I'm happy to have some real estate in it.
And specifically real estate that caters towards the owners of those equity holdings.
Sort of, yes. I think that um, I, I don't I don't know what happens to the population of Los Angeles. Like I know
Yeah.
there's a huge population, and there's a lot of single family homes of different scales, and I don't
Yeah.
know what happens to kind of that population. But I'd rather own a single family home in Orange County than in Detroit.
Let me push back on that part a bit, because that is also probably a point of difference. Again, I think a large part of the supply constraints are artificially created by humans in housing.
I
For the 90%.
I think that like it's not just artificial. I think there's actually like geographical. Like you can't build a home in the ocean.
Well, here's
Or I guess
why I
maybe you
say
can't. Like that's like a separate thing. But
here's why I say artificial, because we're not talking about we need 10 times more homes. We're talking about we need 20% more. And if the human race wanted to, if our country wanted to do that as a national priority, we could get that done. I don't think it's an unsolvable problem.
okay, I don't know if the country's going to solve that.
Meaning,
I
think it's self-inflicted.
The government can prevent you from building new homes. The government can't prevent you from not having children. So the like population growth is a bigger concern to me. In terms of like this not playing out.
Okay, so those are both concerns in my mind. If population starts shrinking, then we close our borders, population shrinking, all of a sudden the supply issue is mute, right? But at the same time, the reason I say it's kind of self-inflicted is we're in charge of the rules to create more housing, and we're able to change those rules. And I say this specifically because I'm running into these issues as I'm investigating housing for myself, and I'm seeing how ridiculous some of these situations end up being.
But
and I see
most of them tend to be like to protect the environment idea.
Well, okay, so
honestly, that's not fair to say, Mass, but like there is a decent amount of. I don't think we're going to build homes everywhere. I think there's.
I can give a few examples where it's not environment based. It's more maybe NIMBYism, maybe.
Oh yeah.
So, but again, I feel like these are artificial. Like they don't need to be there, and I think sometimes they're there to protect the house of cards of real estate, because if there was this shift, the prices would fall for 90% of homes.
I do think that a home with a backyard.
Yeah.
I guess maybe the population growth assumption is probably the bigger key. Like, do we think? What do we think will the population of the U.S. max out at some point? And if it does, what's the max?
Yeah. Well, I think we had that penciled for the next conversation. Like what? So
okay.
I think we'll certainly get into that one. But okay. I want to talk just a little bit about the supply, because we mentioned UBI. We mentioned this notion that there's a bunch of automation. There's a bunch of awesome things that are happening in industry that are making things cheaper. It's very hard, I realize, to make housing cheaper. But the reason for this is because if you build a factory home in one state and you want it to work in another state, you have to go through so many layers of bureaucracy. It's just not worth it. Especially because you can't secure a loan for that factory built home the way our financing system works. So now you got to pay cash, and now most of the people won't have that opportunity. And what I'm just highlighting is just a high level concern of why we're not in a situation where homes can be built very cheaply, even though we have all this technology to allow it to happen.
Okay, I think so. Another aspect of this is like there are a lot of jobs that can be done with a laptop anywhere.
Exactly. Yeah.
Building a home for your physical body
Yeah.
cannot be done for like zero cost.
No, but for example, okay, so I know this for a fact that factory built homes are cheaper,
Okay.
except you can't buy them because financing is just so hard to do.
Okay.
And here's the issue, right? In order to set up a factory built home factory, you got to build a factory, right?
Yeah.
And once you get the factory up and running, if the market slows down for financing, then all of a sudden you have a factory that can't output homes, right?
So do you think that bureaucracy gets cleaned up in the next two generations? Because I think the U.S. has a really good history of it not getting easier.
Okay, so I'm hopeful that can happen, right? I think if AI can help us with anything, this would be one area where it might be able to provide some benefit, right? It's like we have all the tools to make, we've mentioned this before, education cheap, right? We just need to put them to work. And I think the same is...
Okay, separately, like I do wonder like how much a teacher in person helps. Like I have not been fully convinced that you can, that like all like related screen time issues. Like I think that that again, it's a whole different conversation. Like there are more schools and that are, I think schools are more likely to go back to pencil and paper for learning math than go to 100 student classes taught on a video. But that's like, yeah, it's not the conversation today. I'm sorry. Yeah. Okay.
Let me just shortcut my whole point. There's robots. They're gonna build your home. They're gonna show up with a hammer and some wood. Okay, 20 years. I'm pretty sure.
Okay. Do you own the robots?
Yeah. The Elon. What's Musk saying? 50,000 in like 5 years. So call it 20K or 50K in 20 years. Sure.
Okay.
Robot butler will cook and make home.
And build your home.
Yes.
But you got to own the land first.
Okay. Well, a big part of the point I'm making is the home itself is a depreciating asset, right? You get to depreciate on your taxes for a reason. It's because stuff breaks.
Yeah.
The main point of real estate being an asset is not the actual home, but the land underneath it, right? That's the actual part, or that you're banking on.
That's the geographical constraint.
Yeah. However, you're paying for the actual home too to get access to the land that's appreciating, right? So in my mind, it's not the most efficient way to invest because a good part of it doesn't actually appreciate.
Okay. Well, I don't know what we'll pick up next time. Probably population growth or
it is.
Something like that.
But I'd just like to make one other small point. Sorry.
Just one more.
We wanted to kill this topic, so okay. So I also don't think there's going to be such a constraint on where people live as there is today. For example, Florida was uninhabitable in my mind before air conditioning.
Okay.
The whole state was just impossible with the humidity down here, but that all changed, right? Once you can have indoor controlled humidity, right, at your perfect 24/7, I think it's the best place to live, and millions of people agree, right? I think with similar advances of technology, it'll open up a lot more areas where people will live. I think a lot of people in the past relied on their job to focus on their location. And I think that's why, for example, a lot of housing areas have skyrocketed, like New York and San Francisco, et cetera, because these were the metropolitan centers of great jobs.
Yeah.
But I don't think that's going to be true anymore. I think you can live wherever you want. And I think that opens up the entire planet for livability beyond just the U.S. and the few states that have nice weather.
I kind of agree. I don't know about like living outside the US part. I think that's a I don't know if countries go away in 2 generations kind of thing. But I do think I think people still want to live near other people. So I don't think that it'll be, like you'll see people move off to the middle of nowhere. Everyone gets their own like 10 square miles in the middle of Montana kind of thing. So I do think people still want to live near other people, but I think they're going to choose again. The places in the U.S. that are nicer, just nicer climates. I agree. Like Arizona without pre-air conditioning was probably similar, but it doesn't mean people want to stay inside their house all the time.
Robots build the biodome. You're fine in Chicago. You're good.
Okay. That's so far the best argument you made to me. That like I made it to reconsider it.
All right, I'm done.
Biodomes. Okay. Well, I can be convinced on biodomes. But again, the real estate inside the biodome will be a lot more valuable than the real estate outside the biodome.
Yeah, but biodomes are free. Come on.
but you still like to find if you want a backyard in a biodome, that's gonna be really expensive.
No. Land in the Midwest is cheap.
Just like tons and tons and tons and tons of biodomes.
Yes. Or a big one, right? A huge biodome. You all live inside. You and your best friends. Wherever you want.
Okay, we're done on biodomes. I this is the fight I expected. Less and longer than I expected. Might be one of our longer episodes, but I knew we were not going to agree with each other today.
Okay. Yeah. Did we cover what we intended to do? No.
We didn't actually resolve anything.
That's okay. We opened a few cans of worms, so that will keep us busy for the next few.
Okay. It was fun, though. Thank you, Trishul. That was a fun conversation.
Always entertaining, Aaron. I enjoy this as well. Thanks, everybody, for listening. If you too enjoy these conversations, give us a like because each little like helps. Thanks.
Bye.
Bye.
We appreciate you joining us today for this episode of the Mind Money Spectrum podcast. Be sure to visit mindmoneyspectrum.com to access the entire library of episodes. Remember, it's not black and white, but the wide spectrum of gray area where you get to pursue the freedoms you want in life. Opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Have a nice day.